Fabian Cardolino here, your Weston real estate specialist. And this is the breakdown of my 10 easy steps to take when you're purchasing a home. Today we're going to break down step number 1, which is mortgage calculator. You want to find out exactly what is your budget when it comes to purchasing a new home. First thing you're going to do is open up Google and search for mortgage calculators. I will leave a link for my preferred calculator that I use because it's very simple, straight to the point. Now, after you find the mortgage calculator, you want to sit down and figure out what is your budget on a monthly basis. After you have your calculator open, you're going to see the purchase price, interest rates, down payment, etc., etc., etc. Right now, we're going to use an example of $400,000. So the purchase home is going to be $400,000. You're going to put that as a sale price. Then you're going to put, let's work with 10% today. At a 10%, you just put in there 10%, and then the interest rates. Depending on the time that you're purchasing the home, interest rates will fluctuate. So let's just use, for example, right now, 6.76%. Then you have, underneath it, you have to add the additional escrow money. Escrow is essentially what takes care of your insurance policy, what takes care of your yearly taxes, and if there's any PMI in there. So if you don't know how much the taxes on a certain property is, you can always go to the county appraisal site and it will tell you exactly how much they paid for the previous year. But let's just say that you don't even know what property you're gonna buy. So an average, give or take, you can use a 1.2% annually of the purchase price. Now remember, that's not an exact number. We're just using that as an example. Then it comes to the home insurance. Home insurance is very difficult to find out exactly how much it's going to be unless you actually call in, get a quote, and get a final number. Now, in South Florida, here in the market, I know it's crazy. So in a $400,000 home, we're looking about $5,000 a year for a policy to insure a home worth $400,000. So that's what we're going to use in this case for the insurance premium. Then it's PMI, private mortgage insurance. I did a video on PMI a few weeks back. It's down in my feed if you want to go look for it. But essentially what it is, if you don't put 20% down, the mortgage company will add an additional insurance policy to the escrow of, give or take, it's around $200. It depends on the value on your credit score as well. But it's usually around $180 to $200. So if you're using the mortgage calculator, you want to base that on a yearly basis so it calculates correctly. So on a $200 policy a month, you're looking around $2,400 a year. Now the next section is going to give you the option of adding homeowners associations in there or like any other expenses that are tagged along to your home. Once you calculate that, let's just use this example, the $400,000, 10% down, 6.76% interest rate, the insurance and all that we just went over. You're looking to have a monthly payment of around $3,300 a month. Now, in order to be safe and smart about your money, you don't want to purchase a home that will fill your full budget all at once. Meaning, if your budget is at $3,300 a month, then you shouldn't buy a $400,000 home. You should go into like a $380,000, $360,000, $350,000 home. The reason behind it is because taxes fluctuate, insurance fluctuate. There's a lot of variables that come into play when it comes to your monthly payments. What happens if there's a big natural disaster next year or in 5 years from now, and the insurance companies rack the rate up again? And now you're stuck with an additional $250 payment that you weren't accounting for. Now, for the sake of the video, let's just say that your budget was $3,700 a month and a $400,000 home is coming out at around $3,300. Boom, you got your house.